Hello everyone, my name is Sunday. I welcome you all to Igeinsfx. In today's episode, I'm going to be teaching you guys trading psychology. All right. And without wasting time, if you have not subscribed, please do subscribe to my YouTube channel, Igeinsfx Igeinsfx, all right? Igeinsfx. Now you can also visit our website, igeinsfx.com, all right? So on today is day 27. Oh man, we're almost done with this crash course. I told you guys it's going to run for a month. And don't forget, after you have subscribed, then open my YouTube channel, then go to the playlist where you have beginners free course. All right. And we have all the videos that are there is for beginners. It's for those who know nothing about how to trade Forex. All right. From the starting till up till this topic, psychology, everything you need to know about trading, Forex trading, for you to be a Forex trader is in there. All right. That playlist is fully packed with information and with the things, the tools that you need to become a Forex trader. So today we are going to be talking about trading psychology, guys. So without further ado, let us proceed. Okay. What is trading psychology? Trading psychology is the inner game of trading, the mindset, emotions, and habits that influence your performance. Even with a solid strategy, poor psychology can sabotage your results. All right. So psychology deals with your mindset, your emotions, your habit. All these things joined together will now influence your performance, either to make it better or to make it worse. All right. So the core element of trading psychology, number one, we have discipline. One thing about Forex is that psychology, after you have learned the basics, you have learned everything about trading. You know how to read market structure, you know how to perform top-down analysis, you know when to get involved in the trade or in the market. But psychology, or apart from that, you already know how to use your risk management properly. Then the next thing is psychology. Because if you are not psychologically sound, you might be prone to errors, even though you know how to trade, because it has to do with your emotions, your character. And one thing about trading is that it shows as you trade, it shows your character must reflect in your trading, your attitude. If you're an impulse person, somebody who don't calm down to take a clear decision, you just see, oh, this is a setup, you just jump in. After you have already placed a trade, you will now start seeing the real thing. Impatient, all these things. So one of it, the element of trading psychology is discipline. All right. Stick to your trading plan no matter what. All right, that is discipline. Sticking to your trading plan no matter what you see. Your trading plan. Your trading plan. Your trading plan. If you have done your top-down analysis, all right, if your strategy, what you trade is SMC, that is smart money concept. All you need to do as you are performing your top-down analysis, you single out the what do you call it? You single out the one moment. You single out the other block that caused the break of structure to the upside. You single out that candle. All right. One moment you single out that candle, you now refine it to your time frame of entry, time frame of execution, where you normally place your trade, the time frame that you use. You now refine it down to that time frame, that other block. Get it from the higher time frame, refine it. All right. And each time frame as you are scaling down, make sure you read the structure. All right. So once you now refine it to your time of entry, all you need to do is what? You wait for price to come back to retest that other block. That is just it. You have already designed your strategy. You have already put in place a strategy. That is what you trade. If you are trading support and resistance, as you are doing your top-down analysis, you start from the higher time frame because that is where you get the direction where the overall trend is going. As you scale down from the higher time frame, you have already marked the support level. If you have already decided or you have already seen based on the structure that you are bullish, that the trend is bullish, then you mark the support. Once you mark the support, all right, you mark the support. Now, what you need to do is that you mark the break of structure. You say, okay, break of structure, this is a support that broke the structure to the upside. This is a support that broke the structure to the upside. You have marked them, all right? Then you now scale down to your time of execution. All you need to do next is for you to wait for price to come back to that support level. Because if the trend is bullish, you wait for support level to buy before the trend will start going up. You wait for a retracement. Once the retracement has ended at the support level, then you buy as the trend is going up. So it's like that. One moment, please. Pronto? Come non c'è. Va bene, prendi. Sì, prendi. Ok, va bene. Ciao, 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 a dopo. Sorry for that interruption. So, if you're trading support and resistance and you have already checked and you discover that you are bullish, then you always wait for support level where buyers will wait for price. As price gets there, you enter the trade. you know that once it gets to that support level and it found support there, then price should rise. You enter from there. So all you need to do, as you have marked your support level, you wait there for price. As you have singled out your other block, you wait there for price. All right. And there's one strategy I want to also teach you guys before we wrap up the whole segment is going to be what I call demand and supply. All right. Demand and supply is also a strategy, but you discover that everything they almost look the same. It's just that the demand and supply is a zone, a zone. All right. Another block is a particular, you have to refine another block. All right. You first of all identify the zone, then now refine it to one candle. That is other block. Support and resistance is still that same support level. All right. But you just wait. Once price get there, anywhere you now find support, all right, you now see, once you see a movement to the upside, you enter. So you see, they're almost the same thing, but little difference. Though, don't worry, I'll teach you demand and supply before we wrap up the segment. So what am I trying to say? You should be disciplined. Discipline means sticking to your trading plan, no matter what happens. Come rain, come shine, choose one strategy, stick to it. The next thing is avoiding impulsive trades or revenge trading after losses. Now, when you say impulsive, there are people who don't have patience. They just open their chart without proper analysis. What they do, they just, oh, once they see a bullish candle, oh, it's bullish, that means it's going up. Bah! They'll just click buy. Or they'll just see a bearish candle. Oh, bearish candle. Yeah, they'll click sell. No, without proper analysis. You don't be impulsive in anything when it comes, most especially when it comes to trading. You don't do that because any mistake will always cost you. All right, you don't follow your trading plan. And another thing is revenge trading. After let's say, for example, you place a trade and you have done, let's assume now that you did your analysis well. And at the end of the day, you took losses, all right? Or a loss after the trade must have played out. Maybe when you entered, you've done your analysis and all that, you place a buy, maybe you place a buy, and it got to a point, the trend now turned. It found resistance somewhere, and the sellers that are at the resistance level, they were more. So they now turn the ball and it now hit your stop loss. All right? All you need to do is accept that loss and relax. Don't worry about it because it's part of it. It's part of the process. You cannot always hit your take profit target every time. Even there are sometimes you don't even need to get to your take profit target. You take your profit because once you see the movement and because once you place a trade, what you'll be doing, remember I taught you guys trade management. You check your trade, how it's progressing. By the time you check your structure, by the time you look at your structure and you discover, oh, this thing is creating double tops. That means there's likelihood of a reversal. All right. For you to be safe, for you to play safe, you just take your profit. You take your profit and wait for another opportunity. So don't ever trade a revenge trade. Let's say you lose a trade. Like I tell people, once you lose a trade, it is better you don't even trade that day. You have lost a trade, forget it. That is the way I feel I'm able to advise you. That is what I do. If I place a trade and at the end of the day I take loss, what I do is, okay, I'll just go back and review that trade and just forget about trading that day, so that I will review it and know the reason why it played out that way. You have to reset your mind. Or I know fully well that, okay, losses and gain or target or maybe losses and gain, they are part of the process. All right? They are part of the process. Successful people in the world, if they tell you how many times they tried and failed, tried and failed, tried and failed before they became very famous and they now got it right. All right? They tried and failed, and later they now got it right. They became very famous, wealthy, and all that. So it's like that. Success, failure is part of the equation of success. Get it right. Know that that is how it is. So if you lose any trade, don't revenge. No. Instead, go back and review that trade. Instead of rushing, I want to get the money back. No, there are so much to make in trading. In financial market, there are so much to make. All right. So the first thing, the element of trading psychology, the first thing is discipline. Stick to your trading plan no matter what. The second one is avoiding impulsive trades or revenge trading after losses. The next one, the second one is what? Patience. Patience means wait for high probability setup. That is the patient. Have the patient to wait for, for high probability setup. It's not every setup that is going to give you a good trade. It's not every setup that you are going to get yourself involved in. No. There are some setups that are not even worth it. There are some setups, once you look at it, you say, okay, this is a high probability setup. You enter full margin. All right? So, not forcing trades when the market is unclear. You open your chart, you do your top-down analysis, you cannot even figure out whether the trend is bullish or is bearish, whether it's consolidating or you don't even know. But your mind, you just want to trade that day. No, it doesn't work that way. Once you see that the market is unclear, it has no direction. It's not bullish, neither is it bearish, and you cannot even see that it's consolidated, it's just there. All you need to do is have that patience to wait. Allow the market to give you a direction. All right? So it's very clear. So discipline, now that discipline, having the ability to stick to your trading plan no matter what. And also avoiding impulsive trade or revenge trading after losses. That is discipline. Patient, waiting for high probability setup. You have that patience to wait no matter what, no matter your situation. Wait. That is the patient. And not forcing trade when the market is unclear. That is patient. Like I told people, as a trader, I'm advising you guys that are just coming into the system. Just go and carry a garment of patience. Wear it. Anytime you want to sit down to look at your chart, you want to trade, carry garment after you have dressed. Carry garment of patience. Wear it. Because you need to be patient. That is the only way you can make good things, good stuff out of the market. All right? You don't need to be in a hurry. Be in a hurry simply means that you want to just waste your capital. Some days you might not have trade. 1 day, 2 days, even three, sometimes 1 week, no trade. You can't just say, okay, because the market is open. People are just busy trading, going up, coming down, wasting money. Some are making money. But that is not your style of trading. You don't need to bother about anybody. Think about your own strategy. Think about your own plans and stick to it. The third one is emotional control. See, the first one was discipline. Second one, patience. The third one is emotional control, meaning managing fear, greed, frustration, and overconfidence. You need to manage all these things. You need to be able to manage your fear. You need to be able to manage your greed. You need to be able to manage your frustration. You need to be able to manage your overconfidence. All right? You need to be able to have control over all these things. When it's time, for example, when it's time for you to take action, take action. You don't need to be fearful. And when you are in a trade and you are making profit, don't sleep there. Don't be greedy. You have 1,000, you already have 1,000. You see you are in profit 1,000 or in profit 2,000, 3,000, 500 as the case may be, 200, 100 as the case may be. Your mind now is that even if you are seeing that the trade is approaching a well-defined resistance level in case of a bullish trend, or in the case of a bearish trend, a well-defined that has been tested support level, that when price get to that level, there will always be a reaction. There is every likelihood that buyers are there to push the price and you are still there. All right? So the best thing you would have done, and you say, okay, there's an obstacle, because all those levels posed as obstacle in the financial market, just like uh, uh, in the structure, in the market structure, anywhere you see a support level or a resistance level, all these are obstacles. Because sellers are there at the resistance level, sellers are there. At the support level, buyers are there. Anytime price get to that level, they will attack. They want to drive, they offload their what do you call it, their orders to push the price up. Even some, they have already set pending orders. The whole world is watching all those levels, not only you. So you are making profit and you now discover that your trade is getting to a resistance level or a support level that you know for sure that there will be a reaction. What you need to do is to apply that trade management. Instead that you take your partial, like I have taught you guys, you take your partials, because once price get there, anything can happen. You take your partials, then move your stop loss into profit or break even after taking partials. So even if the price now reverse from there, you now come back to hit your stop loss, you are not losing anything. You have already gained by taking partials. Taking partials simply means if you enter, maybe your lot size is one lot size, all you need to do is you just take 0.5. That means you cut it into half, you have already saved the other one. So even if price now reverse at that level, at that stumbling block that the price is approaching, if peradventure it now reverses, it will come back and hit your stop loss. You are not losing anything because you have already moved your stop loss into break even. That is how to manage trade. And that is how to not be greedy as a trader. All right. And apart from that, you see, you have to be able to manage your frustration no matter what happens. Let's say you get a stopped out. You don't need to be frustrated. It's part of the process. Or when you see volatility in the market, your mind is just going here and no, you have to just stay calm, control your emotions. And the next one is when you are overconfident, overconfidence do kill. All right? Overconfidence will make you lose what you have already gained. You just know that the price you'll be making profit and it's close to a resistance level, a support level. You just say it will just break that level. You know that it will break that level. Who told you? How did you know how many sellers that are waiting there at the resistance level, or how many buyers that are waiting there at the support level? Just like two people playing ball as they are coming, we have about 10 people in front of those three people. How do you think they can just break through that kind of break through them like that? You think it's easy for just three people to break through 10 people? It's not easy. There will always be a very serious battle, even if they are able to break through, but it will not be easy. That is the truth. Overconfident, trade that you are not supposed to get involved in because you are too overconfident. I'll say, oh, well, it will go this way. You are just sure without carrying out your proper top-down analysis, without reading your structure very properly. You just say, because you've been trading, it will go this way. No, overconfidence is not the way. It's not the way to go. You have to always use your sound mind. Stay calm during volatility or draw down. All right? Because the market is always volatile. The market is volatile. All right? If price is going up, it does not mean that you just take off and start going up like a plane that is taking off from the airport and you know it's going up. No. It will go up, then it will come down. That is why we have a push phase, retracement phase. A push phase, retracement. Then as it's doing like that, it's going. It's going. So it's like that. During all this time, volatility and all that, you have to stay calm. You have to be able to control your emotions. Provided you have entered the trade, you have set your stop loss, set your target, then allow the trade to run. When you now see that the trade is going in your favor, you now apply what we call trade management. You can now move your stop loss, moving it to break even. Or after you have done that, take partials and allow the rest to run. That is trade management. You know your risk management, you have to apply your risk management even before you get involved in the market. Before you get involved in the market. Then another thing is confidence. Trusting your analysis and strategy. You need to have confidence about your analysis. Trust your analysis and your strategy. Before you can trust your analysis and your strategy, you must have done what we call back testing. You must have tested a strategy, and all those analysis that you have been performing, you must have tested everything. And by the time you now know, okay, that my strategy works. When I perform my analysis, I take the right decision anytime I want to enter the market. All right? That will now give you confidence. You now build confidence about your analysis and your strategy. And you stick to it. Don't deviate from it. Don't say Mr. A or Mr. B is trading this strategy. You now want to now change. No, stick to one. Stick to one strategy. Like I told you guys, I'm going to teach you guys 3 strategies. I've taught you 2. All right. One is this SMC, that is smart money concept. The other one is support and resistance. Now, I'll now teach you another one that is demand and supply. All right. It's a strategy. Demand zone and supply zone. I'm going to teach you guys demand and supply. It's a strategy. At the end of the day, you now go and test all and see the one that resonates with you, the one that you like to trade. Then choose one. Choose one. All right? Not second guessing every move or being swayed by none. You have performed your analysis and your strategy you have implemented. Any movement should not sway you, should not bother you. If there's noise in the market, should not bother you because you have confidence in your strategy and your analysis. That is why, just like when you started driving, I like to use driving as an example. If you want to go out, carrying a car is a burden because why? You don't know how to drive. You're always conscious. But by the time you have mastered driving, as a matter of fact, if you are going out, you cannot go out without taking your car, without going out with your car. And when you are driving, it's just like a pleasure. You are enjoying it. You don't even think. Yes, there are so many risks on the road, but all those things don't bother you anymore because you know how to drive. You maintain your lane. Where you are supposed to slow down, you slow down. Where there is traffic light, you know. Where there is zebra crossing, you know. And all that. It does not bother you again. It's the same thing as when you have trust and confidence in your analysis and strategy. You have a strategy. You stick to it. Then the 5th one is risk tolerance. Risk tolerance simply means you understanding your comfort level with losses. Because there are people, for example, there are some who, once they lose, let me use $500, they will feel very, very bad and depressed. And you have some, when they even lose $2,000, they won't feel anything. All right, so you should understand your risk tolerance. And that is why we have risk management, which I've already taught you guys. Because when you want to get involved in a trade, the entry point after you have done your analysis, you know your entry price. All right? Because you always wait for price to get there. You don't rush to catch up with price. You have to do your analysis and wait for price. That is good trading strategy. You must wait for price to come to you, not you rushing to meet price. No. All right? You have done your analysis, top-down analysis, your strategy is in place, you know where you are supposed to wait for price, then you already know, you have idea of your entry price. Once price get to this this price, this is where I want to buy, or this is where I want to sell. All right? From there, you already know where you are supposed to put your stop loss that will protect your capital. You already know where you put your TP, your target, where you want to take your profit once the trade goes in your favor. All right. So now, trade risk management. You now, from your entry point to your stop loss, how many pips? So if you look at it, because each pip has a price. All right. If I get involved in the same trade and I'm using the same um, uh, lot size with you, and we have the same capital, and from the entry point to our stop loss, let's say it's 50 pips, or let's say 30 pips from the entry point to our stop loss. Some will just place it, they don't even care. They use one lot size, boom, 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 they just place it. No. I will look at it as okay because I have the experience. I know that if I use 1% as a lot size and my entry point from my entry point to my stop loss pips, the gap there, the pip is 30 pips. Now I will now know, okay, how much is a pip based on the assets that I'm trading? I will find out. Once I know, I will multiply it. And so, no, when you now multiply it to your lot size, you now discover the real lot size that you are supposed to use. So if the if your the space between your lot size and your entry point to your stop loss is wide, all right, all you need to do is you reduce your lot size. All right, reduce your lot size. And how to work it, I've already showed you. Or you just go to position sizing. All right? Go to position sizing, you key in all those, your entry, your stop loss by pips, you key in, and it will tell you the exact lot size you are supposed to use based on the distance from the entry price to your stop loss. That is how to manage risk. You don't just jump into trade without putting all those things into consideration. Then, so that you now know how much you are risking per trade. You now know that, okay, even if I lose this thing, if I lose $100, I will still be fine. Some people, if they lose $500, they will still be fine. They will not be beating themselves, eating themselves up. So you should know before you enter, you should know what you'll be able to tolerate, your risk tolerance, before you even enter at all. So using proper position sizing and stop losses, I just explain it. I don't need to, I don't know, it is very clear. Before you get involved in the trade, do your analysis. All right? Then your entry point, you have already marked it. Your stop loss point, you have already marked it. Your TP, where you want to take your profit, you have already marked it. Then calculate the distance, the stop loss pips, the distance between your entry and your stop loss. Once you calculate it, if it's 30 pips or 20 pips or 50 pips, then multiply it by the pip price. It's very important. At any point in time you want to trade, do that. You don't even need to carry, I've already showed you how to do it manually as a very straightforward. Now, if you don't want to do that, go position sizing calculator. It's online, very simple. You key in all those things. It will show you, will tell you, use this lot size for, based on this, use this lot size. As simple as that. So, common psychological pitfalls. We have emotions. We have emotion, how it hurts you, how to overcome it. Now we have fear, greed, revenge, impatience, overconfident. Now we have fear. Fear, that is missed opportunities, early exits. All right? Because of you are fearful, you have this fear, you don't even trust your strategy, you don't trust your analysis, fear will now make you to miss opportunities. Why? The trade that you are supposed to get involved in, because you are fearful, you could not click buy or sell. All right? So fear is not, in fact, in real life, fear is something that kills even before you die. Fear is not good. It's not good for you to be fearful. All right? It will make you to lose opportunity because there are businesses you want to do because of fear. You don't want to take risk. You want to do this. You don't want to take risk. You are fearful. It will make you to miss opportunity. And also because of fear, fear will make you have been making profit, there you now exit early, which is wrong. You are supposed to follow that trade to the top. You have been making profit where you are supposed to make 2,000 or 1,005 or 5,000. You now cut the profit. Because why? You are fearful because you don't want the price action to come back and take the one that has given to you. But I've already told you guys, this is the way, this is how you'll be able to manage your profit, your trade. Take your stop loss, put it into break even. You are not losing anything. Once a trade move, as a matter of fact, I do it a lot. Once I place a trade and it moves in my favor, the next thing I do, I carry my stop loss, put it in break even. Break even means you put it right on top of or a little above where you enter the trade. At that point, you are not risking anything. You can allow that trade to run to eternity. Even if it now comes back and hits your stop loss, you are not losing anything. You did not lose anything. You did not lose anything. That is it. In fact, I do it a lot. Once a trade move in my favor, I carry my stop loss, put it where I put my entry. Not losing anything anymore. I'm not risking anything. The next thing, I allow my trade to run. When it gets to a level I want to take my partial profit, I take. I still allow it to run. So it's like that. Don't exit your trade early when you know that there is potential for you to make more profit. Allow it to run. All you need to do, carry your stop loss, put it into break even, take partial, and allow the rest to run. How to overcome it? Use back testing to build confidence. Instead of fear, use back testing to build confidence. It's very important. Greed. Greed. This is what is really killing people too. That is over trading. And apart from that, ignoring risk. Over trading. Some people want to take like 10, 20 trades in a day. Who does that? Even scalpers, people who scalp, they wait for opportunity. Once they see opportunity, they get it. As it move a little, they take their profit. That is scalping. It doesn't mean that because you are a scalper, you just see price, you just see trend moving, you get in, you get out, no. You have to time yourself. Once you mark the structure, mark it, wait. Once you get there, enter. As you move a little, you are out. You have already made profit. That is how smart scalpers operate. So you don't just want to overtrade. If you are overtrading, you can make money. and you can also damage your account. Ignoring risk, where you are supposed to put your stop loss because you are in a hurry. You just get in, you did not put your stop loss. You say because you are there. And I bet you are exposing your capital because if there is any volatility, you will see a candle can just come, move straight down. All right? Most especially if the violence are in the market, they will flush the price down. And if your stop loss is not in place, they will drain your capital. So endeavor to always use stop loss. Don't ignore risk. And like I said, you've been in profit and you are seeing that your trade is moving to a very significant resistance level where price has tested multiple times, or a very significant support level where price has tested more than 2 times. You know that anytime price gets to that place, it must reverse or there will be a reaction. Even at the end of the day, now breaks below or breaks above, there will always be a reaction. What do you need to do? Take partials. Or you get out of the trade. Let the trade tell you, okay, I want to break above. Let it break. If it breaks above it, it will come back and retest it. Then you enter again. This is for people who are just coming into the system. Please follow these steps and see that you won't have trouble. All right? Then all you need to do is stick to your plan and targets. How do you overcome greed? Stick to your plan and targets. As simple as that. Do the things that you always do over and over and over and over and over and over again, no matter the situation. Stick to your plan. Believe in your analysis. All right? Believe in your strategy, and everything will just be fine. Even if you are in a losing streak, it does not mean that that strategy is not working. It just means that at that point, that strategy is wrong for it. So when the market now rebalance, you will see you will be making profit. Even the dons in the industry, they face losing streak too. Maybe in a week they will be losing. All right, it's like that. Losing is part of it. Failure is part of success equation. All right. Then revenge, emotional trading after a loss. In fact, we don't need to talk much about this. Don't revenge, don't revenge trade. If you lose a trade, as a smart person, as a professional trader, go back and review that trade instead of you want to make that money back. No, that is revenge. Don't do that, because if you do that, that the decision you make at that moment is not the right decision. So don't do that. All right? Don't do that. Don't revenge trade. It's not good. All right? Once you lose a trade, accept your loss. Accept your loss. Pause, reflect, and reset. All right? That's the way you overcome revenge. Once it happens, you pause. You reflect on it. Then you reset. I tell you, go back, review the trade. Instead of you want to trade and regain your money. No, don't do that. Impatience. Jumping into trades too early. The trade is not ready to sell or is not ready to buy. You jump in. too early. It's wrong. Now, the way you can overcome this is use alert instead and structure setups. Do your structure setups. Like I told you guys, mark the structures, then wait for price to get there. Once price gets there, then you get involved in the market. As simple as that. You already set, you already structured the setup, then you already use your alert. Once price trade and get to that level, the alert will trigger, then you will now come and place your trade. Overconfidence, ignoring signals, or risk management is very wrong. You are too overconfident, then you are ignoring signals. You see signals, you don't even look at it. You see some signs, you don't look at it. Or risk management, you don't even apply because of overconfidence. I've been trading for 10 years, trading for 20 years. You are now ignoring. Let's say you are driving. You've been driving for 10, 15 years. When you are now driving, where you are supposed to slow down, you don't want to slow down. Where you're supposed to give a distance, keep a distance with the car that is in your front, you are just going bumper to bumper, too close. And when something happens, you think if you match your brake, if you step on your brake, your car will stop a little. No, your car will move a little before it will stop. So that is why you always have to give a distance with the car that is in front of you. If you went to driving school, you understand what I'm saying. So stay humble, review trades weekly. I will even say daily, because all my trades, once I do everything, I check. At the end of the day, I check. If you cannot do that, review your trade weekly or daily if you have the time. So that is it, guys. It's very important. Tools to strengthen your psychology. Trading journal is very important. This will track your trades, your emotions, and the lessons learned. All right? Pre-trade checklist. Have a pre-trade checklist. Confirm setup, risk, and your mindset before entering. This thing is very important. Meditation and visualization. Stay focused and reduce stress. Because in trading, you need to be very focused. You don't need distraction. All right? Because any action you take, there's repercussion. And you are playing with your capital, your hard-earned money. All right? You need to get into a trade with your clear head, take good decision. All right? Accountability partner or coach. Share your goals and review progress with your coach, your mentor, or maybe somebody like minds like you who is a trader to help you even review your progress. All right? Now, faith-based perspective for Christian traders like you, or even if you're a Muslim or whichever, all right? So, peace over panic. Always have peace over panic. Trust God's timing, not market noise. Stewardship mindset. Trading is a tool, not an identity. Prayerful discipline. Seek wisdom before decision. Grace in losses. All right? Learn, grow, and don't condemn yourself. Even if you make loss, don't condemn yourself. If you make loss, don't beat yourself so hard. Just know that it's part of learning, and as you do, you will grow. Success equation, failure is part of what? Success equation. For you to be successful, it means you must have tried, failed, and as you continue, you see yourself on the other side. And as far as I'm concerned, the final thought, your trading edge isn't just technical, it is emotional and spiritual. Mastering Forex psychology means mastering your reactions as human, building habits as human, and trading with purpose. On this note, I say thank you guys. Put all these things in practice and you discover that you will not struggle as a trader. I bet you. So thank you so much. If you have not subscribed, please subscribe to my YouTube channel. So many people are watching these videos, materials, but they are not still they've not subscribed. Please do subscribe. If you are getting value from this channel, please subscribe. All right, and help to share the video to others that may be in need of all this kind of materials. Please, 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 your support, I will not take it for granted. I appreciate you guys. Keep learning, and as you do, you become a master of yourself, and you will even be the next person that will teach other people, that will share the knowledge. Because trading, there's so much to make in trading. Like I said, trading is a skill set, not a get-rich-quick scheme. All right? It's a skill set. Get the skill. All right? Focus on the process, and the rest shall be history. Thank you so much, and God bless you. The next episode, we shall meet on the next episode. Thank you.